Welcome back to BestProp4U. Bitcoin is under pressure today and it's actually fallen to around 58k, the first time since last October. And this is because the market is facing a perfect storm of macroeconomic headwinds and also pressure from derivatives. We have a 10 billion options expiry hit in the market on Friday. And because these, the bulk of these open contracts were bullish calls that are now heavily out of the money, the market is skewed, and that has left, of course, the markets scrambling to hedge their position and amid thin summer liquidity. We also had quite a significant outflows this June as well, around 3 billion. And if you add into that Hawkish Federal Reserve and higher Treasury yields, of course, dollar is at 101 or so, there is no surprise that Bitcoin is bleeding. So let's take a look at the charts. Of course, the daily, we do see here, of course, that we have had a potential reversal, but that was stopped at around the 67,500. A second attempt that was stopped by the median line on the daily, which is at 65,500 or so, and then a flash to the downside that created, that formed this new low. However, and important for context, we have not closed below 59k yet, okay? And at the same time, not only do we have a Bollinger Band squeeze potential forming, we do see a very sharp divergence on the daily RSI. All of this combined could mean that another attempt to the upside, if we break above the median line at 63,660, the peak at 67,300, and of course the upper Bollinger Band at 68,250, then we could see eventually this becoming a double bottom with a fake out. And this is important for context. Also above that, we look at the 50 Fibonacci retracement, which comes at 70,500. And importantly, we have a confluence, a cluster between the 38.2 Fibo and the swing high at the middle of June. So this is also a very important level to take into consideration. But let's not forget, to turn truly bullish, we must break the 50 Fibonacci. This is where sentiment shifts. We have a long road to get to the 50. It's not going to take a few days or a few weeks. Even if you ask me, of course, everything is possible, but given the current bleeding that we see, any rally that might lead to a reversal might be organic rather than sharp, if that makes sense. Now, if we fail and we close below the 58k or so, right, then we need to start taking into consideration and also when it happens, into consideration, of course, of lower levels. Let's not forget that we have been dealing with a flag pattern over here for a while, right? And we broke below, but that gives us a level to take into consideration because we have a starting point and a pullback point, and of course the bottom. The 78.6 opens the door to 52,400, and then the 100 Fibonacci takes us to as low as 44,136. Obviously, we do have other levels taken into consideration as well. For example, a high activity level, as I see here, is around where we currently are, the 60k, and then below that you've got the 56k, and then there is another level at 53,700 and another one at 52,120, and then of course the bottom at 49k, the bottom of August 2024. This is all important for context because we need to look at the price action, the patterns that we have had in the past, and obviously what does the current Fibonacci retracement and Fibonacci extension tell us in the midst of a potential squeeze in Bollinger Bands at the time where also the divergence might also play a significant role. Obviously, all of these catalysts call for a lower time frame analysis, and down on the 4-hour we do also confirm a much shorter time frame, of course, RSI divergence. we can see that we have for now bottomed out at around 59, 58K. And if we manage to close above the 59K, we could be setting up for a leg up to around 62,200 or 62,500, $300. Not much difference for Bitcoin. This is the one level we're talking about is the 18th of June low, and then the other one is of course the median Bollinger Band. Moving higher is going to open the door to 65,500, which is not just the upper Bollinger Band on the 4-hour chart, but also the swing high we saw in the middle of, actually on the 22nd of June, which on the daily, if you remember, was the middle Bollinger Band resistance. Important for context. And important as well to draw this and highlight that particular level, as well as this one, which is a combination of the price action and volatility, so that we can move on the 1-hour chart and we see what potential signals we have there. So the 1-hour chart shows a high momentum bearish candlestick here that actually dropped from 61K down to around 58K. Quite a big insignificant candlestick on the 1-hour chart. But again, we also have a divergence on the 1-hour chart. So we have on the daily, we have on the 4-hour and on the 1-hour. And this is multi-time frame analysis telling us that there is potential for upside in the short term and perhaps even in the medium term, since the daily also shows it. It is very, very important that not only we remain above the 59,500, which is the peak at the Bollinger Band in here, but we reclaim the median at 60.60, and very important, the 1-hour open of the high momentum candle that at 61,150. This is very important. This was where all this liquidity exited, if that makes sense. And on the 1-hour again, the upper Bollinger Band comes exactly pretty much at the highlighted level at 62,300 or so. Very important for context as well. So the 60,050 level is our immediate upside pivot. And as long as Bitcoin remains below the median line and the high momentum open at 61,150 or so, the intraday situation remains bearish. Okay, bulls need to clear 61,150 to shift the short-term momentum. Otherwise, expect continuation to the downside as this massive options expiry approaches tomorrow. So trade safe and keep your leverage low during these volatile sessions.